Hi, welcome. So today we'll be going over the cash book. So let's get into it. Michael opened a new car dealership in a small town, Michael Vehicle CC. As the new accountant, which would be you have been asked to prepare the cash book. So these are the following transactions for October 2021. On the 1st of October, we have cash on hand, 25,000. So this is cash at the beginning of the month, right? So this will be our opening balance. We have sales of 90,000. These are the cars that we sold. Purchase beverages and snacks for team meeting, 5,000. Paid cash for new vehicle deliveries, 36,000, and advertising cost of 9,000. Then we have rent paid of 13,000, salaries of 48,000, and we donated to charity $7,000. How generous. So what is required is we have to prepare the cash book for October 2021. So let's quickly get into this. So we have an opening balance. So remember, cash book is an asset, and if you go to the first video, assets, when they increase, we'll always record them on your debit side. So we are going to debit the cash book with the opening balance of 25,000. So we have your opening balance of 25,000, and then we have sales. So we are done with this one. So we have sales of 90,000. So remember sales, okay? So sales, we have more money in the bank, okay? So they pay us money, more money in the bank, so it increases on the debit side because it's an asset, okay? So we have our sales, and the sales was 90,000. 90,000, okay? And then on the 4th of October, okay, let me not forget my dates. So the opening balance is on the 1st of October 2021. So normally we just write the day because it's of cash book at, okay, we don't have that, but okay. So this was on the 2nd. The sales was on the 2nd. So on the 2nd, we have sales of 90,000. And then on the 4th, we purchased beverages and snacks for team meeting, $5,000. So money is going out because we're taking out money from the bank. So this is going to be, let's just say, purchases. Or you can always call it like miscellaneous because it's just for, or if there's an account, because usually we add it for that account name. So normally you have, we can just say recreational or just like stuff, can just add it for stuff. And that was 5,000. And the date was on the 4th of October. So dates are very important. You do get a mark for adding your dates. Then we have on the 6th of October, we paid cash for new vehicle deliveries at 36,000. So this is purchases. So purchases is normally the account for which you purchase items of your main source of income. So for example, if you make clothes, purchases would be for the inventory, you know, the material, the buttons, the zippers for those clothes that you're making. So purchases is 36,000 for the new deliveries. So this is on the 6th. 06/10/2021 purchases. So you will have a column for your date in your cash book. 36,000. Advertising cost 9,000. So advertising is an expense, okay? So this is an expense that we paid for, money out of the bank. So remember, your asset, money in, and money out is on the credit side always. So it's on the 10th we have advertising, and that was a 9,000. So please focus, remember the dates, always add the dates. You will have a column for your dates, so this is just for tutorial purposes, just for you to understand, but the main focus of this video is to know where your entries go, debit or credit. What account are we working with? We're working with an asset account, and each transaction will affect it differently. So your rent paid, how will it affect your cash book? Rent paid, money out. Money out, your asset is decreasing, so we will put that on the credit side. So we paid rent of 13,000 on the 13th. Okay? And then salaries. How does salaries affect your cash book? Salaries, you're paying your employees, money is getting out of the bank, so this is decreasing your cash book, and assets decrease on your credit side. So you always have to ask yourself these questions when you are preparing your cash book or any account for that matter. So this is 48,000. And then we donated to charity. Same thing. We took out money from our bank to go and donate. So our asset is becoming less. How does that affect your cash book? Money out. So that was a 7,000 donations. 7,000 donations. All right, so after this, now we have to add up your balances, because now we want to find out what is the closing balance. How much money do we have left in our account? And to do that, we need to get the difference between your debit and your credit. So if we add up your debit side, 25,000 plus 9,000, that will give you 34,000. So just 90,000, excuse me, 25,000 plus 90,000. That is 115,000, so keep that in mind. Then for your credit side, you have 5,000 plus 36,000 plus 9,000 plus 13,000 plus 48,000 plus 7,000. We have 118. So which one is larger? So the 100 and so in the box you add the largest amount between the two, which is your credit side. Then we deduct 118,000 minus 115,000. It gives us 3,000. So this is our closing balance at the end of October. That is how much we have left. And what we do now is, basically what this means is we paid out more than what we actually had. Okay, no, the 3,000 will come here, excuse me. It's a minor detail. Here is your 3,000 because we wanted to balance. So this is your closing balance. So if you add up your 25,000, your 9,000 and your 3,000, you should be able to get your 118,000. And then your opening balance for November, we are going to bring it down over here, and then we'll have your opening balance is 3,000. And it's on the credit side, meaning that we are in arrears. We have an overdraft, so we don't have money in our account. But if it was on this side, it would mean that we actually do have money on the account. So remember, if you have a debit, you are in a surplus, and if you have a credit, there's an outstanding. Thank you so much for watching, and I hope this video really helped you. Please comment and